With world-class expertise and local insight, Dexus creates value, not just for today, but long into tomorrow.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB this Thursday afternoon. I'm Juliette Sarli. Great to have your company. Let's see where the local market is finishing the session. Not really going anywhere. We had a little bit of a spike around 11, then a sell-off after the jobs data into the lunch break. A bit more of a rally around 2 to 3 p.m. Sydney time, and that says CBA, the index leader, hit yet another record intraday high, getting towards $183.31, I think, and that lifted a lot of the other banks as well. But we have seen a bit more of a petering out coming through into the afternoon session. Now remember, we're not really going to get a lead from Wall Street tonight. Markets there closed for the Juneteenth public holiday. We will be monitoring announcements though from the Swiss National Bank and Bank of England in terms of interest rate decisions, and of course that comes after the Fed left interest rates on hold overnight, and signal borrowing costs are still likely to fall this year but slowed the overall pace of expected further rate cuts. Let's get into the themes of the day then, and it very much has been a seesaw session on the local market as we discussed. Also, of course, the labour lull. Now, this is quite an interesting outlook in terms of the overall jobs market because April, of course, had Easter, a lot of those public holidays that caused a lot of seasonal workers, particularly in the part-time employment. That all fell away in May, so we were left with 2.5 thousand employment or job loss, I should say, versus expectations of around 22,000. But don't mistake that for weakness, because despite that headline dip, I guess, in employment, the core story is still strong. Full-time jobs surged. The unemployment rate held steady at 4.1%. Ka-Chong Lau from Oxford Economics said that this isn't a stumble, it's a stabiliser, said that we're seeing a normalisation, not a nosedive in terms of the overall jobs market. July, still going to be live. I spoke to Phil O'Donoghue from Deutsche Bank, though. He doesn't think the RBA will cut again until August. And he says, of course, more importantly than today's jobs data is the CPI print that we get next week. And speaking of central banks, we had the Fed overnight. We're talking about the RBA. We've got more action tonight with the Bank of England and the Swiss National Bank. Let's have a quick look at where the sectors have finished today. And a lot of weakness coming through in miners as we continue to monitor this fall in iron ore. City also downgrading its iron ore forecast in the short term to $90 a tonne. The Singapore contract falling below $93 a tonne. That is the lowest level since September. Rio Tinto down 3%, BHP off by 2%. Quick look at the banks. I mentioned CBA there hitting yet another intraday high. It's still closing higher by about 1.5%, but it's pulled back from those highs, although when it's just still pretty much holding at $183, that is pretty impressive, isn't it? And I think I spoke out of turn before when I mentioned the actual intraday record. It was $183.31. So a big spike coming through from the stock that continues to defy the naysayers. A lot of the REITs today came through with an update on their distributions, lifting a lot of those as well. Charter Hall there up by about 2%. Vicinity Centres, which is one that was mentioned earlier in the day as a specific stock that one of our guests was looking at, up by 1%. Not a lot on the corporate front. We did hear Rio Tinto reached a settlement in a lawsuit that accused it of defrauding investors. NAB paying more than $750,000 in penalties for alleged breaches of consumer data rules. Changes at the C-suite, including at ANZ, with Mail Carnegie to retire from the bank of the 1st of July. And WiseTech directors, also supporters of Richard White, Charles Gibbon and Michael Gregg, leaving the company's board, shares down by about 2%. Probably the biggest story of the day was that KMD Brands update. It recorded a 0.5% drop in sales in the first 10 months of full year 25, mainly due to Victoria's warmest autumn on record, which meant that people weren't buying at Kathmandu. It also had a bit of a slowdown in Obor's footwear brands, but Rip Curl, it says, is performing well, particularly in North America. Those Americans love our surfing gear, don't they? All right, let's welcome to the COB a familiar face, Jimmy Jiang from GBA Capital joining us. Great to have you with us, Jimmy. How are you seeing the overall market moves? I mean, a lot of caution here as we continue to monitor what's happening geopolitically.
Of course. Obviously, both over in the US and also in Australia, we saw a bit of a flat day today and over in the US. So obviously the key kind of, theme was the Federal Reserve holding the rate, which was kind of widely expected. But it was also reaffirming that their expectation of two rate cuts later this year. Now, what kind of really shook the markets outside of that widely, predicted statement was Powell's comments on inflation risks kind of tied to tariff. He obviously essentially said that they're kind of difficult to predict, which is more adding to that uncertainty at the moment as well. So look, at this stage, I thought the Fed is kind of still signaling that softening bias, but it's very conditional. It's very tough for the Fed at the moment. Powell made it really clear that future decisions are dependent heavily on economic data. And right now, we're kind of seeing that early signs of cooling. Jobless claims over in the US are still elevated. The housing starts and building permits have also declined, which is kind of pointing to that weakness in the property sector. Obviously, the key theme of whether you're in Australia, or in the US, or in the global market, is that geopolitical tension between Israel and Iran. Markets are really speculating whether US will have to step into this. And the last thing the US wants to do right now is spike the oil price, because that's what they really want to control, so that inflation cools down even further. So we see the Fed cutting rate. So oil price obviously edged higher as a result, supported by that sharp drop in the US crude inventories. So that's obviously feeding the inflation risk as well. So a lot of volatility and not much certainty. So I think we need to be a lot more careful now than ever when we're allocating to the market.
Yeah, absolutely. And when we do allocate, we're looking specifically at a lot of the material players. You're the second person today who's talking to me about antimony. What are you seeing?
No, I mean, it's kind of, if you kind of dissect into what, I'm sure antimony is not that familiar to a lot of viewers out there. So I think it would be a good start to maybe start with the commodity itself. So it's a strategically critical, used in defense, semiconductors, flame retardants, and increasingly that grid scale batteries. The US and Australia have both listed as a critical mineral. So what's kind of changed recently is that China banning exports of key antimony products, and that's kind of triggered a lot of scramble for those non-China supply. And obviously, due to that reason, prices are surging. More relevant to obviously the discussion between Iran and Israel escalation, antimony is also used in military application, including fighter jets, military primers, night vision goggles, lasers, you name it. It's probably a majority of that stage. So obviously, with that theme behind the, we got the two big wars ongoing right now, it's kind of a no-brainer to kind of seek this kind of commodity that will actually have that really good effect in case of the war escalation in the Iran continuously progress. So one of the names that we really like in the ASX that has this kind of geared exposure to antimony is Trig Minerals. The ticket code is TMG. So they got that antimony Canyon project in Utah, which is kind of actually the largest known undeveloped high-grade antimony deposit in the US. So it's shallow, it's high grade, and it's in that T1 jurisdiction. And with the US 100% kind of relying on imports, this obviously could be very strategically vital for anybody. So to kind of give the viewers a little bit more of an ease, for comparison, for example, there's a Canadian listed company, Perpetua Resources, which also has that antimony exposure in a similar field, and they're capped at 1.7 billion Canadian dollars, while obviously Trig is still kind of sitting around the $80 million Australian dollar. So as you can see that the value is significant on the value at the moment.
Trivia time, Jimmy, because I looked it up earlier. Do you know what the periodic symbol is for antimony?
Look, the symbol is largely in the strategic vital, the high grade. Look, I think the main thing is that we need to kind of understand in terms of antimony now why we are kind of focusing on this particular commodity right now. I think that's the key thing, and it's largely because of the macroeconomic factors. So that's probably the main focus it should be at the moment.
Yeah, very well spoken. You've been media trained. It's SB for anybody wanting to know what the periodic table was. That was a little bit of a trying to catch you out, Jimmy. That's mean of me. Let's talk more about rare earths. You're looking at St. George Mining as well.
Yeah, look, St. George Mining is largely exposed to that rare earth. It's obviously another critical space. Obviously, China controls that 70 to 85% of the global refining. It's obviously kind of recently clamped down on those exports on those rare earth magnets. And obviously that's putting a lot of EVs, defense and these clean tech sectors under a lot of pressure. So a lot of this kind of Western governments are stepping in at this stage. Obviously those US tax credits, the strategic hubs, and obviously those supply chain projects are all kind of getting well funding. So it's kind of becoming that, really good national security issue as well. So St. George Mining, in our view, is the standout because they got that good project in Brazil, which is one of that highest grade rare earth deposit globally. So it's only the JORC compliant resource in South America. So very good asset that they're holding onto at the moment.
And just more broadly, and sort of going back to the antimony point, because it is linked as well to silver, the actual physical silver commodity that is ratcheting higher, is this where people should be looking to? Has gold sort of had its dash?
That's a really good point. With silver obviously being a number one pick right now, obviously it's a good one to add into a portfolio. But the reason why we prefer antimony is because of that, war kind of escalation coming further. It's not really the alternative of gold or a silver in our view. It's more so that getting that exposure to the escalation that's happening around the world at the moment. We still got the war going on in Ukraine, still ongoing. Don't know when it'll be ending as well. So to more be kind of diversified exposure is in our view. Silver is definitely a good one to add, but our view at the moment is just gold and antimony at the moment.
All right, Jimmy, great to have you back. Thank you. We'll see you again soon. Jimmy Jang there from GBA Capital. Let's get back to the equity market in terms of what the stock of the day on the call was. It was KMD Brands. And hear from our experts, Zach Riaz from Banyan Tree Investment Group and Mark Gardner from MPC Markets.
When someone starts talking about, maintaining or trying to protect or not lose market share, that's a concern. And Kathmandu is a really good actual brand. So I'd be cautious, and I think you'd be very selective of which kind of consumer spending you want to be leveraged to. Kmart's, Bunnings, Temple & Webster, which has got a structural growth story to it, that's where we're focused on.
This is it's a turnaround story, just minus the turnaround part. So until it shows any signs of, of stabilising those earnings, and I wouldn't really be looking at it. I think you probably, and I do agree as well. I think that Kmart brand, is it Anko and things, is that's a high quality brand. I think they're even investigating maybe shifting and shipping that to the US as well. This wouldn't hold any interest for me. I'd probably prefer to be in cash. I'm even going to say a sell.
All right, that reminds me of my back packet days, Kathmandu. Let's have a look at the leaders and laggards. Now, Tabcorp, this is interesting. It is one of the front runners today, up 3%. It looks like potentially a buying opportunity here potentially, because it actually got fined for spamming customers for thousands of unlawful marketing messages. Elsewhere, IDP Education up 3%, Centurity Capital, HMC Capital, we talked on all the REITs coming through with their distributions, and then having a look at the laggards as well. Bellevue Gold, we did see a little bit of a dip in the gold price overnight, although it has come back in Asian trade. It was down 6.4%. Mesoblast also coming under pressure, but it's risen something like 11% so far in the month, so maybe a little bit of profit taking occurring there. The small caps, Elsight up 24%. Race Oncology, we had a great conversation with CEO Dr. Daniel Tillett. Put simply, they are working on combining two drugs to make sure that patients undergoing cancer treatment, chemotherapy, are not being made to feel worse than what the actual disease is causing them. A really, really interesting development there, and it's really encouraging. Shareholders are seeing what they're doing too, up 7%, $1.37. To the downside there, we've got Meeka Metals off by about 14%, and some of these smaller silver miners as well. Silver mines down 9.4%. Tonight, we've got the Bank of England interest rate decision along with the Swiss Bank. The BOE expected to hold at 4.25%, and US financial markets are closed for Juneteenth. Having a look tomorrow, we get Japan's core CPI, and it's a New Zealand public holiday for our friends across the ditch. This is for Matariki, the Maori New Year, based on the Lunar New Year. The local market hasn't really gone anywhere today. Very flat finish, no lead coming through from Wall Street as we mentioned. So we are just treading water as we continue to monitor all the developments occurring in the Middle East and of course more broadly. That does it for this edition of the COB. We'll see you from 9:45 a.m. Eastern tomorrow. Have a great evening.